let's also welcome on board Siddharth Khemka, Head of Retail Research at Motilal Oswal. Hi, good afternoon, Siddharth, and great to be speaking with you. And first up, help us with your take on the markets. What are you making right now? Because there's a lot of uncertainty around with respect to the tariff, how this could actually impact the businesses in the times ahead, and we still have the 90-day window left. So what's the outlook coming in on the markets right now?
Yeah, good afternoon, Srishti. Good to be on the show and glad to be interacting with you. So if you look at on the global front, things are gradually improving. We heard the US Treasury Secretary as well as US President Donald Trump saying that India could be, in fact, one of the first few countries with whom US does a trade deal. So very close to getting that negotiation done with, and I think that should be positive initially for the exports oriented sectors, but I think that should also lift an overhang which has been there for quite some time. So I think India could possibly do the deal before the 90-day window. Now, the concern for the market has in the last few days especially has been not from the institutional front, who we are seeing that on a regular basis or on a daily basis, both DIIs and FIs have been net buyers. And that's a phenomena we generally do not see the both being buyers on the same day, which has been the case for last few days. The retail and maybe the individual investors that I think are a little bit cautious, especially given the geopolitical issues brewing up on our border itself with Pakistan, and I think that they were bracing up for some increasing in the geopolitical tensions that could lead to some meltdown, and that led to some profit booking in the market. So what we are seeing is that Q4 earnings largely in line to better than expectation. This could be the last quarter where we see the earnings bottoming out. And from here on, we believe some of the domestic focused sectors. So, for example, you have the banking, financials, where RBI has been consistently improving liquidity. Interest rates have been cut by 50 basis points, and our expectation is that during the course of the year there could be another 50-75 basis points rate cut. That is one space where we are positive and looks pretty strong. We have got pretty strong results from the index, from the banking heavyweights. Another sector is the consumption, and especially if you see the discretionary as well as this time around, we expect the staples also to start showing good numbers on back of improvement in demand, the healthy monsoon predicted by IMD. So that's the another space that we believe could do well. With the trade deal, whenever that happens, some of the export focused sectors, be it pharma, auto ancillary, IT, that could also start showing some signs of strength going forward.
Right, okay, Siddharth, stay with us. It's all about earnings and eternal orders, while Zomato is all set to come out with its numbers. And this time around, it's expected to be a weak set. Why so? Snehi is here to tell us what her poll is penciling in.
Well, yeah, so a weak set of Q4 numbers is what we're expecting from Zomato. On a consolidated sequential basis, revenue is seen growing at 7.8% at 5,824 crores. On the flip side, EBITDA is seen declining 37% just on a sequential basis at just 102 crores compared to 162 crores in the previous quarter. Net profit also expected to be down 29% sequentially at 42 crores compared to 59 crores QOQ. And EBITDA margins are seen declining sharply, coming in at just 1.75% compared to 3% in the previous quarter. Some expectations on the segmental front: food delivery revenue is expected to drop almost 2% sequentially. Adjusted EBITDA as part of GOV we are seeing at 4.3%, contribution margin of 8.6%. For Blinkit, it's expected to post an EBITDA loss of 250 crores, GMV growth of 14% sequentially, and EBITDA margin drop of 1.9%. Hyperpure expected to do well. Factors to watch out for when the numbers come out in terms of a net store addition for Blinkit. What's the outlook on food delivery, margin trajectory, order volume growth, as well as outlook on competition? All in all, weak set of numbers expected for Q4. Keep your eye out on the earnings when they come out.
Thank you so much, Snehi, for getting us all those details. So let's watch out for Eternal. The stock gets very volatile post the earnings, and we see sharp reactions coming in. But Siddharth, given this space, we have seen a lot of competition kicking in as well as impacting Zomato as well. But around this 230 odd levels, if somebody has to take a long-term view, given the growth opportunity in the sector, given the valuation Zomato is trading at. What's the outlook coming?
Yeah, I think there has been some pressure on the earnings outlook, especially after the increasing competition in the quick commerce segment, with all three large players, be it Zomato, Blinkit, and Swiggy, raising funds for the strong expansion plans in the quick commerce segment, and that is leading to some pressure in the interim. But if you take a long-term view, I think the food delivery business is something which is now maturing and giving the kind of stability to the overall earnings, the free cash flow that they have started to generate. Quick commerce is still a high growth segment, and we believe that that could be a game changer for a company like Zomato, even for the likes of Swiggy, where we believe that the high growth finally, eventually, when that turns around, would be a cash generating machine, but one needs to definitely take a long term call. What we see is that the overall is well positioned to capitalize on this expanding base of its customers. We see a steady growth in order volumes as well as values, and with improving unit economics, profitability over the long term will come by, and hence this is a very good levels to look at. Zomato currently
Getting snapped, I think. We'll just get back and get in the views from Siddharth. But Shrikant, let me get your BTST ideas.
So again, yes, the market is like in the range. It is not crossing the level of 24,400. It is not breaking the level of 24,300. And whenever like we see such type of range bound sort of activity in the market, we need to focus on those sectors which are performing or doing well since last, let's say, few days. So in that space specifically, I would to go with a few PSU banks. There we saw a good amount of strength, and in that PNB looks good, which is currently around 100, 101 sort of levels. It is in the range. It is not crossing the level of 105, but at the same time, it is not breaking the level of 98. So with a stop loss at 98, we should look for creating some long positions on PNB with a target of 108 on the high side.
Right. Kunal, what about your BTST ideas?
So I'll go with buy on SBI Life. Insurance stocks have been looking very strong. In that regards, SBI Life is also another candidate of a potential breakout further. So buy with a target of 1800, stop loss at 1730. And Raymond is the other stock which is showing signs of a volume pickup. So it's a buy with a near-term target of 1575, stop loss at 1480.
All right, so those are the BTST ideas coming in from both of our experts. But Siddharth, since we have you back, you were just completing that point with respect to Zomato. So if you want to take it ahead at 230 odd levels, is it a good buy? And Siddharth, since we are just towards the close of the market, just a few minutes left, if you would also like to share that which are the sectors that are looking attractive to you right now, or best if you can talk stocks.
Sure. So just to finish on Zomato, we feel it's a good, strong long-term buy, and we have a buy rating on Zomato with a target price of 260. In terms of stocks and sectors, as I said, some of the domestic focused sectors like banking, consumption-driven stocks that we like. Within the exports focus, we believe that with the trade deal with US, sectors like pharma will be back in focus. One particular stock we like is Bluejet Healthcare. We just initiated coverage today. We believe that the company not only is present in niche segments, but is also looking at driving new products, newer segments, and ramping up supplies in some of the newer segments where the margins are much higher. So overall, we expect a strong growth, at 27% revenue growth over the next few years, and that should, with an average EBITDA of 35%, that should lead to a strong earnings growth going forward. And we believe that stock could be a differentiated pharma offerings, and we recommend a buy with a target price of 865.
All right, so let's watch out for that with just a few minutes left for the market closing. And what we are seeing is that the Nifty is turning a bit volatile indeed. We are actually at the day's lowest point, slipped below that 24,300 mark, as well as when it comes to Nifty Bank, a bit of a profit booking still taking place. More than 300 points of cut is what we are witnessing. Tomorrow is definitely a trading holiday. So maybe just before that, we are seeing a bit of an unwinding happening. But the breadth of the market at the closing, towards the closing, is not looking that great because the advance and decline ratio is not holding up well. And I believe that dollar index is once again surging, now nearing that 99 odd mark, even surpassed that. So we have to wait by and see that when we open on Friday where that dollar index is. But well, of course, yes, we are just getting weaker tick by tick. But life insurance counters, those stocks are doing very well. They are in for a very strong closing. Bharti Airtel too has been one of the strong contenders. And other than that, it's HDFC Bank that is trying to lend some bit of a support to the markets. But it's HUL that is now one of the top gainers in the Nifty 50. And Kunal, quickly, if I can have your take, because at the start of the day, I was just looking that some of these FMCG counters were buzzing, and when markets turn volatile, defensives come at the forefront. But do you believe it's time to actually look into some counters?
Yeah, I think many of these FMCG stocks, they should be bought at current levels, because there are two things which have happened. One is that these stocks have gone through a pain of 6-7 months. These stocks have corrected by 30-40% broadly from their September 2024 highs, which is a very rare kind of an exception, because these stocks, they generally don't tend to fall in a matter of 3-6 months by that kind of a margin. And then the base building has already happened for the last 2 months for these names. HUL has formed a good base at sub 2200 marks, spent almost 1.5 to 2 months at those levels, and then managed to pick up pace further. So I believe that when the market gets into a volatile phase, and especially for a sector which has already been beaten down over the last 6 months or so, I think it's a good time where one should look at buying these spaces.
Okay, that's the take on the FMCG pack. But Siddharth, good to have you on the show. Chandan, good speaking with you as well. And Kunal, we'll let you go on that note.